Do you think we would due, if we start with some of those cyclical names that you cover, due a pullback given that they had quite a strong couple of weeks or month leading into today?
Sure. Makes a lot of sense. Sometimes with days like this, you just learn a bit about positioning and some unwinding of a reversal of trend. Many of the auto names seem relatively in vogue right now with some clients that we talk to due to their potential to outperform in a reopening trade or in a, post-election uncertainty trade, particularly one which could involve people traveling again, moving about freely, so a vaccine trade, and then one that involves any number of infrastructure outcomes you could have once we get, again, through the political uncertainty. So, yeah, sure, a little bit of unwinding right now from what's been a pretty strong run.
Switching the focus a little bit to Tesla, have you been impressed by the resilience of the share price after an initial post-stock split pullback? It has sort of solidified and plateaued for the last couple of months above 400. Have you been impressed by that even when we've had days of broader market sell-off, given how strong their run-up has been year to date?
Listen, the year-to-date performance impressive. In terms of that recent trading color you're highlighting, I guess not terribly surprised. Tesla just occupies a real disproportionate amount of what's still a relatively scarce way to play publicly traded EV and AV excitement in the market right now. Their quarter, as I think noted by your program, was very, very strong. They seem to be using cost savings, right? The story on Tesla, we think, is cost. They're in a cost leadership position. It's growing. That cost then begets profitability, which enables them to cut price, further growing their user base, expanding capacity, making design queues, further lowering cost, then lowering price, expanding the user base, and then kind of getting the real bull case of software and transportation as a service up and moving. So for investors who are pretty focused on putting together a clean tech portfolio, Tesla still holds itself out as a must include in that list. But we did highlight a number six among names of 64 names across 10 sectors that we think you could also consider in addition to Tesla. It's not just Tesla.
When I hear you, Adam, talk about Tesla, it sounds like you're making a pretty bullish thesis on the stock. And I believe you keep raising your price target, including after the last quarter, but still are on hold and not recommending a buy on the stock. Is that right? Why?
Yeah, I think we're at a point where, Tesla has to be, for an investor to kind of put fresh money into Tesla, or we think to even hold Tesla for 3 to 5 years versus other names across, say, semiconductors or batteries or other competitors that are emerging. It's got to be more than cars here at a $400 billion valuation. It should be something on moving from price times units sold to monthly active user and ARPU, genuinely. That might seem like a stretch, but we think that the incremental buyer of Tesla shares here, and we think going forward, will be internet, software, and tech hardware, that community that can see Tesla as an ecosystem that can produce recurring, reliable, software-driven revenue. Some of those software revenue can be between 70 and 100% EBITDA margin, right? And then when you compare that business model to some of the comparables in the software space, right, that's when 40 or 50 times T+2 EBITDA might seem reasonable. So that's just something where I think from an automotive seat, a difficult call for us to make unless we bring in our experts across a number of other sectors across the tech platform. That's what we're working on, discovering a bit more, so we can make more of a competent call or not, as may be appropriate. But right now we're still in the diligence phase, and I think that there's still a lot more discovery to do. A lot of unproven parts of the model we need to respect. And
so your base case, Adam, is 360, about 20%
Correct.
Below today's level, but with an equal rating. Bear case is 114, bull case is 713. It sounds, by the way you're talking, that you think the bull case is more likely than the bear case. Is that fair?
We're not putting probabilities on the bull case, but I would say in our given where the model is going right now, you have to include ARPU times monthly active user. You have to include TAMs that extend way, way beyond auto or even the trucking industry. You need to include industries like insurance or the entire energy complex. You need to include content. You need to include other ways to monetize data, either directly or indirectly. That's how you can get to cases, frankly, even beyond our bull case, right? We regularly talk to investors that think Tesla can be worth in excess of the most valuable companies in the world right now. You're not going to get there with autos. You're going to get there by them using autos to become something altogether different, sticky, recurring, and higher multiple.
Adam, thanks so much for joining us. Much appreciated.
Shepard Smith here. Thanks for watching CNBC on YouTube.